All right. Well, good morning, everybody, or good afternoon, good evening, wherever you might be listening in from. Good turnout today. I see that. And welcome, welcome, welcome. So today I'm going to be talking to you guys about just how to trade and invest better in 2020. And then towards the end, I'm going to share with you some of my picks for the current market conditions that we are faced with. All right, so that's what we'll try to do here today. And so, but feel free to ask questions. Be polite is all I ask. And I'll do my best to answer questions as we go along, because I think sometimes when we answer questions as we go along, it helps. But try to make sure that it sticks within the context of what we're talking about. So maybe like if you need clarification on something that I share, by all means, go ahead and ask those questions. Okay. So that's what we'll try to do. But just to make sure that I know that there's people here. I mean, I do see people, but can anybody just give me a thumbs up, give me a double Y, something just to say hi or something like that, just so I know that I'm not just talking to myself and I have some people over here who can hear me, who can correspond to me so that when the questions comes in, we have no issue. So a quick saying hi, maybe where you're from, something like that, that would really help. Anybody? All right. Okay, well, nobody, anybody? Bueller? Well, I guess you guys are all shy today. There you go. Thank you, Mike. Welcome. All right. At least we got one person. So at least I know I'm talking to one person. No worries, guys. Don't be shy, honestly. My goal is to share with you guys some things that hopefully will be able to help you. Now, if you've ever heard of me before, then you know that I am what you call a market technician, and I'm also a candlestick expert. You can see that in my name there. I don't do fundamental analysis. Funny enough, I studied fundamental analysis in college. I studied accounting actually in financial analysis in college. But when I got into the stock market, I realized that there was more data, or should I say better data, than what I consider to be the old school way of analyzing markets. And so I hope to share some of that with you today. So let's go ahead and get started. Quick disclaimer, we're not licensed financial advisor. I am not, so I need to let you guys know that. So everything I share here today is just from my own personal experience. It's just there to entertain you and educate you. That's it. It's not a recommendation to buy, sell, or hold anything whatsoever, okay? But I'm gonna be sharing with you the things that I use in my type of trading. Now, people have told me that I speak very fast. That is something I do. So please, again, if you have any questions, just ask again. Part of that reason is because there's a lot of content that I like to share, and we only have a limited time. So, this is being recorded, so you'll get the recording, but I urge you to definitely pay attention. Hey, Steve, welcome from Vancouver. We've got some Canadian folks over here, Toronto, Canada, Vancouver. Very good. All right, so what are we going to be learning today? I'm going to show you some simple tips that can help you analyze markets better. And more of this is based on technical analysis, candlesticks in particular, but also if you're interested in improving your investing and trading in 2022, I'm going to show you some candlesticks that you should focus on. And I can almost promise you that if you just focus on that and nothing else, I think I'm telling people you don't need to know everything about the market. If you learn to specialize in one thing, maybe two or three at the most, you can do very, very well in the market. The key is to be patient for those one or two things that you're specialized in to appear in the market. When it does, don't doubt yourself, jump in. Don't worry about what the news is saying. Don't worry about what you don't know. Focus on the things that you know, and you will see that you will do well. All right. So before I get started, I will share with you just a little bit about the work that I do. I have a report that I call the Right Side Report. Now, my company is called Right Side Trading. And the reason why I called it Right Side Trading is because when I first started trading in the market and learning, I was very frustrated about seeing things in hindsight. I wanted to see how I can analyze data now that would help me go forward. And so that's what we do. So since then, I've got really, really good at it. And like I said, I write a report that comes out every week. I just finished writing my report for this week, where I talk about what the market is doing and where the right side of the market, what side of the market should we be on? And you can see here on January 9, we have called tops and bottoms multiple times over. Anybody who's ever heard me has seen me talk about tops and bottoms over and over and over. And This is my report on January 9th, at least an excerpt of that report where we talked about Bitcoin. And you can see the image on the right, but on the left-hand side, just to zoom out and highlight some of the things that were said in there. I told our subscribers at that time, which is literally 3 weeks ago, that the more we zoom out, the clearer it is becoming that Bitcoin is displaying major topping pattern. I'm going to show you what those topping patterns are, what I saw that made me literally write exactly what you see here. I said, this is going to look ugly. This is not looking good. Chances are very high, not slightly high, but chances are very high that Bitcoin is going to suffer for the next 4 to 9 months. And so I even went online and I actually posted, I said, you know, most people don't believe things unless it's date stamped. So I went out there the very next day and I did a video, posted on our YouTube channel. If you don't have our YouTube channel, you're not following us on our YouTube channel, you want to follow us, by all means, go there, Right Side Trading, not to be confused with Right Side Trader. Make sure you find Right Side Trading. But needless to say, we posted it on there to say, look, we're going out, letting everybody know, be careful with cryptocurrencies at this stage. I had some people come back and say, oh, no, you don't know what you're talking about. You're not in this world. And I said, look, I understand that I'm not in the Bitcoin world, but one thing I do know is data analysis. And the data here is showing that the market or this industry or this Bitcoin is ready to go down big. And I'm going to show you exactly what I saw that made me tell people this, okay? The next week, the week after that, the report that we wrote, I said, we are prepared for a bearish drop that can be significant, lasting for weeks, if not months. This warning sign is more prevalent on the NASDAQ and the Dow Jones Industrial, but topping patterns are beginning to appear. Now, again, I share this with you because a lot of people can say, oh, we've been saying the market is going to drop for the last year or the last 2 years or the last 6 months or the last whatever. One of the things that I pride myself in is that we can see when it's about to happen. So rather than waiting 6 months, a year, and waiting for something to happen that you believe is going to happen, wouldn't it be nice if you could actually see when it's actually beginning? Does that make sense? And that's the beauty of what I like about the way we analyze markets, the data. It's not subject to biased opinions. It's just, here's the data that says, yep, it's beginning to happen. And so I heard people say that the market is going to drop for months and even years. But to now see, hey, wait a second, this is it. It's now happening. I would rather be the person who saw this last week and we're now back on the right side of the market, which is the bearish side of the market. So I'm going to show you what I saw. And again, hopefully this will help you to see that, you know what, data is very, very important when it comes to analyzing markets, and anybody can learn to do this, truly speaking. So I'm going to start with this. Does anybody know? And again, please, by all means, participate. If you don't know the answer to this question, just type in a no. But does anybody know what type of candlestick signal this is? Now, no cheating. I don't want people going to YouTube or Google and trying to search this. Matter of fact, you could. It would just take you time even if you find anything. It might take you a while. Does anybody know what this candlestick pattern is? Now, if you're one of my students, that you already know this, I see that. Don't worry about answering that. But anybody new who's never heard of me before, do you know what this pattern is? Nobody. Okay, very good. All right, so this pattern is a pattern that we call a bearish right side candle. A bearish right side candle. Now, the reason why I called it bearish right side candle is because when I discovered this pattern, I couldn't find any information about it. And my trading partner at the time just said, hey, why don't you just name it your own pattern and put some parameters around it? And so that's exactly what I did. So I took this information, I studied it a little bit more, and I started putting some parameters around it. And here are some of the parameters that I put around it. The first thing is that there must be a green and red color. So we have to have two candles. The one on the left is green, the one on the right is red. Okay. The second was what we just said. The third thing is the top of the red must be below the top of the green. Very important. So what we're saying here is that we want the top of this red candle, the top here, has to be below the top of this green candle. And then we also said the bottom of the red candle must be below the bottom of the green candle. So you see, just like that. When you see a pattern like this is what we consider to be a right side candle. Okay, so that's the top of the green. We want to make sure the top of the red is below that. And here at the bottom of the green, and we want to make sure that the bottom of the red is also below that. Now, a lot of people would then ask me, well, what about the wicks? Do we consider the wicks? And if you see point number 5 here, which says, ignore all wicks, whether you call it wicks or tails or shadows, ignore that. The other thing is, what I want to do before we start doing anything, we want to make sure that we draw a horizontal line on the bottom of the red candle. Now, when I say bottom, that's not including the wicks, it's just the body. So in this case, once I see a pattern like this, one of the things I want to do is I want to draw a line, whether it's mental or physically, draw a horizontal line at the bottom there. And the reason why I draw that is because I'm waiting for price to close on the next candle below that horizontal line. I want to see price close below that horizontal line the next week to tell me it's okay to start trading it. And then the last thing is never short if that candle that closes below this horizontal line is a green candle. So we never short on a green candle. Take a screenshot of this if you have to, ladies and gentlemen, write this down in your notes. We are just 10 minutes into our conversation. So if you're watching the recording, go to your 10-minute mark and write these rules down. Okay, not really rules, more guidelines. Write these guidelines down because this is going to help us with seeing things in the market. Okay. Now, one thing I always tell people, candlesticks is nothing new. I have to give credit where credit is due. There's a gentleman by the name of Steve Nissen. He was the one that introduced candlesticks to the Western world. I would not know what candlesticks are if it wasn't for Steve Nissen, right? And I also have to give credit to people like Steve Bigelow because these guys improved on it. When I remember when I studied candlesticks based off of Steve Nissen's work, he talked about a bunch of them, like over hundreds of them. And I was doing my best to understand every single one of them. The way I looked at it was I said, well, there's 26 letters in the alphabet. Surely I can learn to master and understand 100 candlesticks in the stock market if this is going to be the language of the stock market. Does that make sense? And so I started studying that. But then one thing I noticed was that there were certain candlesticks that Steve Nissen talked about that were not really showing up in charts on a regular basis. And I said, oh, okay. And then I came across a guy by the name of Steve Bigelow. And Steve Bigelow then at that time had narrowed down candlestick analysis to about 18 different candles. Since then, he's narrowed it down even further to 12. Well, as I was doing that and using some of the work that I've seen Steve Bigelow do, I noticed that there were other patterns that were showing up or patterns that really didn't show up as often as I would like to see in the market. And then that made me start studying candlesticks outside of what Steve Bigelow has done, outside of what Steve Nissen has done. And then I came to a very interesting concept of that candlesticks have, almost every candlestick has a very unique quality. And if you understand what these candlesticks are communicating and the quality they possess, it would help you better when understanding what you're seeing. And so for instance, with the right side candle, one of the most unique quality of a right side candle is that it lets you know that a very strong trend, whether it's uptrend or downtrend, a very strong trend is about to begin. That's something very, very unique. So when I see a right side candle, which is why I said, take a screenshot of what you saw earlier. When I see a right side candle, I know something big is about to happen. The probabilities of something happening is very, very huge. Does that make sense? And again, this has nothing to do with what the story is or what the media is saying. It's just that when I see that, I know something big is about to happen. So in my work, I realized, and you won't find this in any book or any YouTube video or anything like that. What I did was I studied and studied and studied a bunch of candlesticks. And I said, hey, here are the ones that I found to appear over and over and over, that when they do appear, I want to make sure I pay attention to them. There's a total of 7. And what I did was I broke it down into about 3 groups, okay? Well, maybe more than 7, but 7 were the most important ones. The first 5 is what I consider to be primary candlesticks. And what I mean by primary candlesticks is that I noticed that these 5, the bottoms up candle, what we call the bottoms up candle, what we call the right side candle, engulf and harami, and star candles, these candlesticks always, I mean always, appear before a reversal begins. Always. I don't care what kind of candlestick signal you see out there. I don't care what it is. 9.5, 9.6 times out of 10, you will see one of these 5 at the bottom or at the top before the reversal begins. And so when I noticed that, it's like, wow, the frequency of how much these patterns show up over and over and over, I looked at it and said, wow, this must be the ones I want to focus primarily on. And that's why I call these my primary candlesticks, okay? I have yet to find stocks, I mean, unless it's a stock that gapped up on news, let's say, earnings news or something like that, or a merger and acquisition that nobody had any control over and it gapped up overnight. Unless something like that happens, a true reversal in the market will show up with one of these 5. And then I noticed 2 others that I said, wow, they appear so much more frequently than any others that when they do, it's important to pay attention to them because huge reversals are about to take place. And that's something we call the hilltop pattern and the pressured candlestick pattern, okay? From that point on, any other candlestick that exists out there, we consider that to be an auxiliary candlestick signal, meaning that, okay, we're not going to disregard it, but we know it's not as important as these 7. Does that make sense? And so you will notice that some of the favorite ones that you might hear out there, like a doji, spinning top, all this kind of stuff, tweezers, you don't see that on this list. And that's because even though they are there, 1 or 2 things are going to happen. I don't care whether you have a doji, a tweezer top, whatever it might be, you will find that another primary candlestick is going to show up before the stock really takes off. And so I told myself, wow, if that's the case, then yes, it's good to know all the others, but if I don't know anything else, I need to understand these 5, these 7, and make sure I understand how they work in the market, okay? So selling pressure, this is what it looks like. A lot of people might confuse the selling pressure with a hammer signal or inverted hammer signal or a hanging man or one of those type of candlestick signals, okay? The interesting thing is selling pressure could be all of those and even more, right? If you look at some of these, anybody who understands candlesticks, you'll see hammers in there, you'll see long-legged dojis, you'll see, but the key here with the selling pressure candle, and the reason why we call it selling pressure candle, the key is that the wick at the top is long as, or maybe even longer than the body. So when you see those wicks that are long, just as much as the body or longer, I know, wow, we now have a secondary candlestick signal. This is something I need to pay attention to. I'm going to show you examples after examples today. What is the uniqueness about selling pressure candles? Here's what I have found. Now, again, this is just my own research. What I have found and what I use this for is that when I see a long wick, which is a pressure candle, it lets me know that guess what? A major reversal is about to approach. So much so that when I see those things, one of the first things I say to myself is I need to take profits, because chances are, even if it doesn't happen on the very next candle, chances are the stock is not going to go up for too much longer anymore. Okay, worst case scenario, it takes about another 5 candles, 6 candles before it reverses. Best case scenario, it starts reversing immediately. Okay, And so I've learned over the years, we've been doing this since 2013 now. I've learned over the years to just go with that, trust that. Don't second guess ourselves. Take your profits whenever you can and be prepared. That's the key thing. Be prepared for a reversal. Okay. And what it ends up doing too as well is look at that level as a major support or resistance level going forward. So I hope you've got all this information. I know it's a lot of information, but we're going to go to the charts and let's see. But before I do so, I like this heading right here. Market warning signs with candlesticks ahead of the news. Most people who know me know that I don't listen to the news whatsoever. I mean, I listen to it after the fact, but I don't listen to the news to help me make my decision whatsoever. Matter of fact, I always encourage people stay away from the news, okay? And the reason why is because the news has a way of giving us a bias to kind of make us focus more on the story than what the data is telling us. And so what I'm going to show you here is how we use data, candlesticks, technical analysis to stay ahead of the news. I always say this over and over and over. The news that we hear today, usually we've seen the setup, the warning signs a day before, a week before, sometimes even months before. And that's exactly what happened again, even with Bitcoin, you know, and all the others that I'm going to be sharing with you today. So let's start with Netflix. One of the most recent ones that's been on the news lately is Netflix. I want you guys to look at this chart, okay? This is the weekly chart of Netflix. And the big news that we all know right now is that Netflix dropped on earnings because it had what? Disappointing earnings and subscribers miss. But I always tell people, take a look at what happened way before that. See, before the news, guess what we saw? There was a right side candle here, which is this, and selling pressure, which was right there. When that began showing up, okay, and if you follow the rules of what I said about the selling pressure and the right side candle, those 8 rules or guidelines that I gave you, you'll realize that, wait a second, the warning sign was here way before the news came out. When people were like, oh, should we buy the dip on Netflix? I'll say, not until we see bullish reversal signals. But for now, stay away from Netflix. In addition to that, at this top where I circled were 2 fake bullish signals. That's part of our primary candlestick signals and secondary candlestick signals. We saw 2 primary candlestick signals that were saying it was going to go down and 1 secondary candlestick signal, all appearing at that top, right? So when we started seeing all this, it's like, might not be a good idea to be in Netflix. Now, at that time, there was no major news that was coming out about Netflix. But here we are now. Last week, we finally hear, oh, Netflix is down because of earnings. And I always say, was it really because of earnings? Probably. But is it possible that somebody knew that this was going to happen almost 3, 4, 5, 6 weeks before? And they started getting out before it hit the news. I'm just saying, we saw the signs before it hit the news. What about Peloton? This is Peloton. Most people that know me, I look at monthly charts or weekly charts. Very rarely do I go below a daily chart. And the reason why is because I like to see the bigger picture. So before we get into any stock, I want to know, what is the bigger picture showing us, so that way we know that we're in good, healthy companies. When everybody was talking about Peloton, I mean, you could see it all over the place. I kept on telling people, I said, look, something is not right with Peloton. And the whole reason why I kept on saying something was not right with Peloton was simply because I could see exactly what you're seeing right here, which is that selling pressure. Now, all this was before the news that hit the stock recently. And so when ARK Investment and a lot of these other companies were just struggling, people say, oh, because of, you know, the stay-at-home stocks and all this kind of stuff, I said, look, those stories are fine. The most important thing to me was the data has signified that something was wrong. And that to me is what's most important. that something was wrong. Stay away. I had people contacting me, texting, hey, you think I should buy this dip? And I was like, not yet, not until we see reversals, true reversals taking place. But seeing this now, and then now the news comes out and said, wow, Peloton is not doing well. The first thing is like some people text me and say, wow, Wally, you were right all along. I say, it wasn't that I was right. It's just I'm trying to get people to see the data was right. Not Wally was right. The data was right. Those data was definitely available to everybody, just like it was for me. The only thing was I chose not to participate in stocks like this simply because of the data that I saw. Okay. Remember that article that I wrote back on January 9th about Bitcoin? Man, it's looking ugly. Let me show you what I saw in Bitcoin. This is what I saw in Bitcoin when I wrote that article. Now, this is before the news about Russia coming out and posing some ban on the use of cryptos and the mining of cryptos. What I was seeing when I wrote this at the beginning of the year, I was like, OMG, something is really wrong with Bitcoin. We had 4 bearish alarm signals going off earlier this year. Then I was just like, wow. And that's the reason why I went in and said, guys, something bad is about to happen. And the reason why I said this is going to happen for months is because this was happening on the monthly chart. I said at least 4 to 9 months, cryptocurrency is going to suffer. Okay. And that's the reason why I put that there. And then I even went online on my social media pages and I even posted this on there because I said, look, let's go ahead and timestamp this. You can see this on January 11th. I said, look, from the data shown on the chart, if what we are seeing in Bitcoin is going to have some type of ripple effect on the other major cryptocurrencies, then the right side to stay on is the bearish side, or just simply stay away from cryptocurrencies. That's because what we are seeing now, and the fact that we're now getting that confirmation, something horrible is about to happen. And again, there were people arguing with me, fighting me. No, you don't know what you're talking about. Look at this influencer. He said this, he said that. And I said, look, tell me what this influencer has to say about cryptocurrencies 4 to 9 months from now. Because from all I know, the data, which I trust, do not lie. There's a reason why these patterns show up. There's a pattern that shows what the big money people are doing. It's interesting that they can do one thing, but tell us something totally different. I said, which one do you want to follow? What they saying or what they're doing? I said, if you want to follow what they're doing, technical analysis is the only way you can really see what they're doing. But if you're interested in following what they say and have the risk of being misled, then yeah, listen to the news, listen to the stories. I'm not saying that they are bad. It's just, I always tell people, whatever the story is, check the data to see if it backs it up. Because if they're telling us one story and the data is telling us something else, guess who I'm following? The data. The data is what I'm going to be following. So this is Solana. Like I said, if what I'm seeing happening to cryptocurrency, to Bitcoin, is going to happen to other cryptocurrencies, so now I go over to all these different cryptocurrencies and I'm seeing, OMG, this is happening in other places as well. So now they're saying Solana is tanking because of crypto volatility and the fact that it had an outage. I say, well, the warning signs were there almost 2 months ago. Here's Dogecoin. Remember when Dogecoin had that massive rally up and everybody thought the meme stocks is a way to make money and become wealthy? People were asking me, hey, are you going to jump into Dogecoin? It's making people multimillionaires. I said, good for them. But when I saw this chart, I said, there's just no way I can jump into this. This is like a massive, massive warning sign that whoever they were that were pumping this up are no longer doing so. And people are like, oh, you're going to miss out. Why are you going to miss out? You're going to miss out. I said, you know what? I'd rather miss out than be risky. And the simple reason why is exactly what you see circled here. It wasn't like I had any inside knowledge It wasn't like I knew what was going on in other cities or anything like that. One of the things that I enjoy about technical analysis is that it's void of opinions and just data. When I was putting my courses together, I put my courses together in a way that said, if I had to give this to my children, I have a 7-year-old and a 10-year-old. And I say, if I had to give them my course, can they take this information and actually apply it in the stock market? And my goal was that by the time they turn 12, 13, they should be able to just watch what I tell them to do. And knowing that they know nothing about the world, nothing about, the feds or anything like that, I want them to be able to follow this to the T and do well, where in my absence or not. And so I created this in a way where it's void from opinions and just look at data to keep us on the right side of it. And so my daughter right now will come, she's 7 years old, she'll see something like this. Oh no, Dad, we can't jump into a stock like that. I said, why not? It has too much of a long wick. That right there has saved her all kinds of volatility issues that people struggle with every single day. That makes sense? Here's what one person said: Wally, I have studied candlesticks to some extent, but your teaching really puts rhyme to the reason. I can tell you're a born teacher. You found the answer far more than I could have learned on my own. Here's ARK Investment. It's telling people. Kathy Woods was phenomenal last year. I still respect her till today. She has a whole strategy that works for her. The problem is a lot of people are trying to copy her strategy, but don't have the patience for her type of strategy. I know for one, I don't have that type of patience for hers, but I love what the lady's doing, right? So at the beginning of last year, I noticed that it was running into problems. How? The selling pressure that we see. It had 3 failed bullish signals. It had 4 bearish primary candlestick signals and 2 both. It had almost 6 out of the 7 major reversal signals that usually appears at the top. I was like, this is a no-brainer. I'm not getting involved in this stock until it proves me otherwise. Today, we see what Kathy Woods' fund is doing. And again, this is not to knock Kathy Woods at all. At all. I'm not saying that. I'm just saying I was able to use data to see what was really happening. Does that make sense? And if you want to learn how to use data to kind of give you an insight, absence of what everybody is saying, then it's important that you understand how to use this. Here's Zoom, which is one of the stocks in her portfolio. We can see Zoom is not doing well. I'm not surprised because there was too many warning signs before the drop began. Fake signals. The primary candlestick signals were there. So every single reversal, I keep on telling you, and I say this over and over and over, I have yet to see a major reversal take place without these primary candlestick signals. I just haven't, could there be something out there? Maybe, but I just have not seen it. And I've been in this industry for 10 years. I just haven't seen it. And the beauty of all this is, again, by the time the news starts coming out, stay-at-home stocks are not doing well, they're disappointing, the quarter guidance is not doing well and all that kind of stuff. I'm saying I'm not shocked. Was this what they saw? Or did they anticipate that this was going to happen so long ago? I don't know. But the one thing I do know is I knew that nobody was buying this stock to take it higher anymore. That's the one thing. I knew that the bulls were not in control anymore. And the funny thing is, you will see one day it go up, 2 days it goes up, maybe a week it goes up. People say, oh yeah, it's time to buy the dip. I'm like, don't do that. You got to make sure you understand which stocks to buy the dip in and which ones to stay away from. Buying the dip in a stock like this, no. So I go back to what I said earlier. Again, January 14th, I'm literally just showing you the tip of the iceberg, just two things just to say, look, this is what we see. I'm not making this up. Anybody can go to any of these charts and you see the exact same thing there. Okay. But I said this on January 14, we are prepared for a bearish drop that can be significant, lasting for weeks, if not months. I had my subscribers asking me, because most people know I don't usually short. So you saying it's time to short? And I said, it's time to start shorting the market. Something big is about to happen. It was prevalent on the NASDAQ, seen it on the Dow Jones. I went to the S&P 500, I'm seeing top-end patterns. I'm going to the IWM, I'm seeing top-end patterns. I'm going to the transportation, I'm seeing top-end patterns. I'm going to cryptocurrencies, I'm seeing top-end patterns. I said, this is not coincidence. See, it would be coincidence if maybe it only happened in Tesla, or maybe it only happened in Airbnb, or maybe it only happened in Bank of America, right? Okay, fine. But when industries, sectors, indices are all doing the same thing, I said, look, this is not Reddit pushing the market anymore. It's like, this has to be big money. Like Reddit can put one stock, they can push one stock, right? The Wall Street bet people can push AMC, or they can push GameStop. Okay, fine. But to push the whole market all at the same time, I was like, something bigger is taking place. Does that make sense? Something bigger is taking place. And that's why I wrote about that. I said, get out while you can. This is what we saw on the S&P 500. A little bit more subtle, but it was more pronounced, like I said, on the NASDAQ and the Dow. But right there, one failed bullish signal, one primary candlestick signal, two secondary candlestick signals, all happening on a weekly chart at the same time that the NASDAQ, the Russell, the Dow were all struggling and showing topping patterns. I said, something is not right, guys. Take your profit, get out. And then that's when they asked me, if it's not right, can we start shorting? I said, you know what? The fact that it's happening everywhere tells me, yes, it's time to start shorting this. Okay. I just got a text from a guy today. He said, man, have you seen what's happening in the market today? Thank you so much for keeping me on the right side of the market. Okay. These are things that we saw before it happened. And we've done this over and over countless times. Amazon was one of the trades that I was in personally, right? I saw this, I said, wow. I said, look, either I need to go protect myself or I start selling my Amazon shares. But the one thing I knew I could not sit down and do was hope, wish, and pray. I mean, I'm a God-fearing man, so I do pray. But in this case, it's like, look, it's been revealed to you. Something is wrong with this. There's no need for prayer anymore. It's time for action. And I told my subscribers at the time too, something is wrong. Why is Amazon? People trying to figure out the why. Why is Amazon dropping? Doesn't make any sense. I was like, it doesn't make any sense to me either. But the one thing I know is the what is happening. I told my brother this. He's in the Air Force. He's a command sergeant major in the Air Force. And I told him, I said, look, brother, the secret here that I've learned is not trying to figure out the why. I said, forget that. Let other people figure out the why. I said, what you want to be able to figure out is the what is happening. I said, if you figure out what the what is happening, you'll be on the right side of the market over and over and over. I said, forget the why. Everybody wants to know the why. They want to know the story about what's going on in China, what's going on in Russia, what's going on in Brazil, what's going on in Cuba. They want to know what's going on in Africa. They want to know what's going on everywhere. They want to know what's going on with this CEO of this company and everything. I said, that's the whys. Why is this happening? Why is that happening? I don't care for the whys. What I care about is the what. And the what, to me, is more of the technical data. What am I seeing? Am I seeing topping patterns? Am I seeing bottoming patterns? Am I seeing trending patterns? What are we seeing? And so now I'm seeing these topping patterns here, multiple warning signals that were all appearing at the top, failed signals, primary bearish candlestick signals, secondaries. it's a no-brainer. And this is happening on Amazon and a lot of other companies that are big that should be doing really well. Said it's about to drop. Market is about to drop. Okay. So that's what we did. And this is where I say, when social media influencers tell you to buy the dip for the 13th time, but you keep on seeing your account keep on dropping and losing money, maybe because the dip wasn't over. So there's more to just buying the dips, because that's a very common thing that I started seeing people post on social media. Buy the dip, buy the dip. I say, I want advice about buying the dip. Look, it worked when we're in the bullish market. It works when you're in a bullish stock. It works when you're in a bullish trend. But just buying the dip is not always the wisest thing. The only difference is that people just don't know when the stock is ready to drop versus when the stock is just pulling back in a bullish trend. If you understand that difference, it makes a completely different perspective on how and when you should buy the dip. But you don't buy the dip in a stock that is about to crash. If you don't believe me, look at EMC, right? Remember when everybody was saying buy the dip on EMC? I'm just sitting down there, I'm like, wow, the person who bought EMC when it was at $70 and it dipped to 65 and bought more, and when it dipped to 55, bought more, and when it dipped to 50, bought more, and they bought more again at 40, and they bought more at 30, and now it's at 17, they're buying more. I was like, maybe one day it's going to reverse. Who knows? But wouldn't it be better if you just bypassed all that? Do you know how much time you've wasted buying the dip on this when you could have gone somewhere else and invested in stocks that were going to do well? And then when you understand how to tell when stocks are really reversing, because you understand how to read the data, like I said, we call tops and bottoms over and over. The pandemic top, we called it 2 weeks before it dropped. The pandemic bottom, we called it the week of the bottom. When you understand these things, then you can buy at the right time. And it's not necessarily picking the absolute bottom. It's just that you see certain things that tells you, yep, it's reversing. You follow the guidelines. They say, yep, as long as this is happening, we know that the reversal is taking place. Rather than holding on for months, years, buying, only to find out that maybe it's not even going to turn around. I feel bad for the people who would buy the dips on a stock like this. You guys recall when China came out and started cracking down on a lot of US listed stocks? These Chinese companies that were listed on the United States Stock Exchange. And they told them they couldn't do that no more and came up with all kinds of stuff, right? And when that was happening, everybody kept on asking, oh, should we buy the dips? And I was like, you kidding me? But first and foremost, we didn't even hear about this stuff when it came out until June, somewhere around here. So you have to ask yourself, what was the people up here? What did they know 4 months before that? Is it possible that some people knew this stock was going to struggle? Because chances are China didn't just come out in one day and decide, hey, we're going to do this. It's probably had been in the works for some time. Is it possible? Right? That they've been in the works for some time. And then finally, when they announced it, was here, when this happened here. But by then, they're already taking a huge beating. Maybe even started on this big one. Okay, fine. But you see, when that happened still, there were people who say, oh, let's see if we can buy this. It's, if you loved it at $85, you're going to love this at $55 now. No. If you had seen the things that we see, you say, wait a second, that is not a good sign. Usually when this appears, we know it's going to struggle for some months. Why don't we wait until things reverses? And it gives us the right information to saying it's ready to go back up before we jump back in again. That's all I'm saying. Anybody can learn to do this, okay? Anybody. So Joe is asking, where's Apple going? We'll take a look at the chart. We can definitely take a look at the chart when we do the question and answer. So remind me about that again, Joe, when we get to the question and answer section, okay? All right. Let's do this, because I do have some stocks too that I'm going to show you guys. Actually, you know what? Let me just do it. Let's take a look at Apple and see. I want you to tell me, what do you think about Apple based on the things that you've learned today? Okay, let's go here. Give me 1 second. Let me bring this up. Okay, take a look at this. And don't be shy, Joe. There's no right or wrong answer because we're here to learn. Okay, and this might be new information to you. This might not be new information to you. But do you see anything that we talked about today appearing here on Apple's chart? Anything that we talked about today? Does anybody else see anything that we talked about here today? If not, that's fine. We don't have to do anything, okay? But if we see it, it's like, wow, wait a second. It's like you said, thank you so much, Greg. Greg said, I see a right side candle. You are absolutely correct. So what does that tell us? I mean, up here, there's so much information packed up here. It's unbelievable. Unbelievable amount of information. This is where I say, look, I don't care what the name of the company is. If you were to ask me, should I buy this stock today? What do you think my answer would be? Regardless of who it is, you see, this is where people, but it's Apple. No, I don't care so much for the story, but it's one of the biggest companies. It doesn't matter. What I'm saying is data is showing that money is not flowing into the stock. And I don't care whether it's a $5 stock or $5,000 stock. All I'm saying is something is not right here. Okay. And without going into all the primary candlestick signals, I'll just stick to the ones that you guys learned today. Both Greg and Joe, you are absolutely correct. We have selling pressure taking place. Look at this. Selling pressure taking place right there. Right side candles taking place right there. Paul is saying the same thing. You're absolutely right. It's like, I'm not making these things up. So when I see stuff like this, the only thing I'm going to say, I don't think I want to be buying anything. Now, if I'm already in, which Apple is actually one of my largest positions, when I started seeing this at the beginning of the year, I told my subscribers, I said, look, I don't plan on selling my Apple share. I wish I could show you where I wrote that. I think I was actually doing it was a live call I was on. I told them, I said, look, I'm not selling my Apple shares, but what I am going to do is get protection. I'm going to insure myself because this is not looking good. I did that with my Tesla shares. I did that with my Apple shares. I am sitting back right now and people texting me and they're, oh, do you see that? I said, I don't have to worry about that because I saw this three weeks ago and I put the proper measures in place to not have to worry about this. Okay. Put the proper measures in place. And that's the idea of what we want to be able to do is make sure that we see things ahead of time. I don't know what the story is going to be about Apple. Okay. GDX. Let's take a look at GDX. What's going on with GDX right here? Okay. So right now, GDX is unlike the others where GDX is not trending higher. GDX is doing what? Trending lower. Right. And if anything right now, what are we seeing here? We're seeing some selling pressures taking place over here, right? So at this stage, GDX is just, it's not necessarily going up, not necessarily going down. If anything, it's at an impasse. And you know why I say it's at an impasse? I'm gonna just zoom in right here without going into too much details. I'll just say this. We have this selling pressure taking place here. We have this selling pressure taking place. Well, we call this a buying pressure. Right now, this is the impasse that is in back to back. I'm not going to get you all guys confused about this. That's what my invitation to you is about. So you can learn a lot about these kind of things. So you know what to do, what to be paying attention to, what to look for. Let me show you some stocks that I prepared for you guys for today. I want you guys, and again, everything we learned here today, all I'm asking is, can you see the things that we talked about? What do you see happening here with Freeport McMoran? I think that's how you pronounce it. I just always call it FCX. Anybody? What do you guys think? What do you think based on what you've learned? I mean, I would enjoy some feedback just to kind of make sure that, hey, I've done my job. I've given you guys some content that will help you. Do you see what I might have possibly saw in this chart? Selling pressure. Exactly. Right side candle. Thank you. Wonderful presentation. You're welcome. But there's more to this, guys. I mean, if you love this right here, there's more to this. This is just scratching the surface. FCX. Let's take a look at this stock, GM. Look at this. Warning after warning after warning. I can't even tell you how much warning signs is here. I'm just like, look, anybody that tells me they are buying GM right now, all I'm going to tell them is, if you ever seen that movie by Neeson, that movie Taken, remember when he was on the phone call with the kidnapper that took his daughter? And he said, look, I have a particular set of skills. You know, if you return my daughter, I'm paraphrasing. If you return my daughter, you know, I'm saying, I'll forget about it, da, 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 da. But if you don't, I will look for you. I will find you and I will kill you, is what he said. You remember what the guy said? Good luck. Oh man, that's one of the best lines in any movies ever. I mean, that's just, even right now, goosebumps all over my body, right? Well, I'll be the one telling you this. I have a particular set of technical analysis skills. If you leave this stock alone, you will be fine. You will not get yourself into trouble. The only thing you should do is look to probably short this. But if not, it will find you. It will punish you. And it will decimate your trading account. Good luck. Does that make sense? I don't have to know anything about GM. What matters, remember what I told my brother, it's the what. What do you see? Too much selling pressure is going on here. This is a stock that's going to struggle going higher. People are going to want to say, oh, well, but I know this and I know what they're doing to the companies and all this kind of stuff. I say, I hear you. But look at what's been happening to this stock for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months, has not been able to go anywhere. So anybody that's, oh, this stock is going to the moon, I said, for 11 months, hasn't been able to go anywhere. And what is doing, every time you try to go, there's like, nope, we're not so sure if we want to buy this. They sell. And now the data is showing there's more selling pressure taking place than buying. How much of this is related to the market? Probably a lot. But this is where, again, some people are going to say, look, I've held out long enough. It's time to take money. It's time to take my profit. That makes sense? All right. So I have to wrap things up. Let me see. I'll just fast forward these. I'm not going to go into too much details. Hopefully you guys see what I'm going to see here. Okay. Right there. I rely too much on indicators instead of price action. Very good. And there's a time and place for each thing. That's the key, Paul. There's a time and place for price action. There's a time and place for indicators. The key is to understand that. That's, chances are 90%. That's the part that you're missing. You don't understand when indicators are important and when, you know, price action is important. Okay. And if you work with me, I'll help you see the big difference. It's like night and day. So here's another stock. Here's one. Look at this. Whew. All I can say is be prepared. And I'm going to end with this one right here. Again, this is Bank of America. I shared Ford earlier in a company called CE earlier. Okay. So I am running out of time. Let me just do this. I'm going to invite you guys to come. You can see what people said. I've purchased a few of your videos from your website. The information has totally changed my trading life and mindset. Thank you, Wally. All right. So this Tuesday coming up, I'm going to be having an advanced candlestick workshop. In this advanced candlestick workshop, I'm going to show you the 7 candlesticks. I'm going to show you the guidelines of what you need to see. I'm going to show you how to look for them. I'm going to show you all kinds of stuff that I'm telling you would just really help you with your way of analyzing the market. Okay. Go to that website link, rightside.trading.com/patterns. Okay. Take advantage of this, ladies and gentlemen. Take advantage of it. What is the cost? I'm going to skip through all this because I don't have that much time. But if you're interested in learning how to identify the right signals, identify fake ones, you saw me talk about fake ones from real ones. What are the best conditions? That would help you a lot, Paul, to understand when to do stuff and when not to. If you've ever traded stocks where it did well and then you did the exact same thing and it didn't, chances are you didn't realize conditions changed. All right. And you're applying the same strategy in the wrong condition. There's just so much. I've ran out of time. Let me just do this. I'm just going to keep on going. Let me just get to the bottom line. Okay. The bottom line here is 497. Okay. 497. Trust me when I say to spend 497 to know the information you need to know about being on the right side of the market beats anything I spent in college. Okay. It beats that. So please don't let money stop you. Now I'm going to do one more thing for you, and this is it. For those of you guys who sign up before tonight, taking the 10 people that sign up tonight, once the 10 is done, it's over. Okay, the first 10 people by tonight, I would take another $300 off. After that, you might get an email and say, oh, you can't register, or the login is going to change. You can't register, you have to pay $497. But even if you have to pay the $497, don't let that stop you. Does that make sense? Please do not let that stop you, because again, I promise you, some of you guys have lost more than $497 in this drop alone that I was already telling people to be prepared for and protect themselves for 2 to 3 weeks now. And it wasn't because I had any major insight as what's going on in the market, except for the things that I'm showing you here. And like Steve said, if this is something that is easy to follow, then when you come to this, I will show you how to do this on your own. Okay. All right. So thank you so much. Like I said, Steve said, thank you. The signs are there. Love your presentation. You're easy to follow. You're welcome very much, Steve. Come join us, guys. I will show you how to do this without you having to rely on other people. You can learn to start relying on the data that you see on your own. Dave, I'm going to turn it back over to you. Thank you so much. But guys, remember, the first 10 people before tonight, you get an additional $300 off. Okay.